Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
Boom, boom, boom. What's up, zingers, and what's up, futures traders? Welcome back to another episode of Futures Fever. I'm your host, the one and only Kevin Dubriske, here with you guys today. You guys can follow me on Instagram at Trading with Kev. I make sure to post daily economic updates on any geopolitical news that's coming out. But for today's show, we're going to be going over some futures markets, what's going on in the economy, and how Apex Trader Funding could give you, any retail trader, the ability to profit with a prop firm and profit with very little of your own personal capital down. So let's get into it. I've got some slides set up for us as well. What's on today's agenda? We'll go over some live market insights and trade setups. We're going to be doing a giveaway as well. We'll be giving away a free Apex Trader evaluation account, so make sure you guys stick around. That will be in the chat below. Make sure you guys hit that like and subscribe. I do appreciate you all for joining in and join us every Wednesday at 11:30. So let's start right into it, guys. What are some benefits of Apex Trader Funding? Well, Apex Trader Funding provides traders with funded accounts, eliminating personal capital risk. This is probably one of the number one reasons prop firms, especially Apex Trader Funding, is so important and such a great, almost commodity to us retail traders, right? Because it gives us the ability to trade futures, whether we want to trade a full NQ contract or we want to take it light and trade some MNQ contracts. We have zero personal liability. We purchase our evaluation account. They usually run a great sale. They have 80% off going right now. Use discount code FFEVER for Futures Fever to save 80% off. It's also 80% off recurring months as well. You get access to firm capital. Yep, that's right, Monica. They do have a 30% P&L drawdown. If you want, I covered last week a bunch of slides on how we could use the 30% to our favor, actually, and how the 30% really shouldn't have that big of an impact on us. If you want, I will bring those slides up again this week as well. But I had some other slides I wanted to show you guys about the importance of trade confirmation, trading strategies, and the importance. It's so important, guys, to have a morning routine and a trading routine, because once we have a routine down pat, we're able to follow it step by step and no longer trade emotionally. We trade thoughtfully. Earn up to 90% of the profits. You keep 100% of the first 25K you make, not 20K. I know it's written 20K right there. Keep the first $25,000 you make with Apex. After that, it's a 90-10 split. Amazing. They are one of the top prop firms when it comes to their percentage split, and trade with peace of mind that you have zero personal liability. If you purchase a 50K account right now with an 80% off, it's only about $30 and change. And right now they are running a sale where it's $140 for your one-time lifetime PA, which is performance account fee. So in total, if you bought one eval, passed it, and bought your lifetime fee, you're paying $170 of your own capital for potentially taking out maximum of $2,000 per payout cycle, which is every 8 trading days. So 3-step process, guys. You complete the evaluation, you get an eval account, a 50K account. Your goal is 3,000. Your trail stop is 2,500. If you get passed, they give you a funded account. You're on a fresh new 50K account. It now says PA. It's your performance account. And once you pass a certain threshold, you're able to take out payouts from Apex. Yo, good morning, Kevin. What's going on? So step 3, of course, is getting paid out. Once you hit that certain threshold and you make more money above that and you're within all of their rules, which again, there aren't too many rules, guys. The 30% rule is really their biggest rule to date. And I'm going to show you guys how you could use the 30% rule to your favor to help you be a more consistent trader, because that 30% rule, we shouldn't really be risking that much on these accounts anyways. Plus, once we get over a certain threshold, the 30% rule turns into 50%. How huge is that, guys? Apex is really here to help us not only get payouts, but find structure in our trading. And that's what's so important. That's how we could stay in the game for the long run. Long-term contracts, flexible rules, and scalable opportunities. Guys, they get you guys get to trade up to 20 copy accounts with Apex Trader funding. If you're getting started with day trading and you're finding consistency, risking 50 to make 100, risking 100 to make 200, as long as you have at least a 2-to-1 risk to reward and you're seeing profitability throughout your days, if you don't feel like you have the emotional stability to risk more capital to make more money, you're able to copy trade so that you're still trading just your micros or your small portion, but it's copied against multiple accounts, which really helps us in the long run. Guys, win a free Apex evaluation account. Super cool stuff. Shout out to Apex for always taking care of us. They are probably one of the best prop firms that I like to trade with as well. Fill out the form in the comments below for a chance to win. Last week's winner was announced last Friday. They got an email. This week's winner too, you will get an email this Friday with a special coupon code, and you guys get to use that code for any account size you want. If you want to get started on a 25K account, you could use it on a 25K. If you want to even get a $300,000 account, you could get it for free as long as you won that code. So congratulations. And guys, use discount code FFEVER for 80% off. That's the discount code. So let's break down some of the markets for today. Actually, first, I did want to cover a little bit of what a trading routine is and how, as traders, with routine, we're able to see more consistency. Without routine, guys, we're going to be bouncing all over the wall and we're going to have trouble remaining cool, calm, collective, and consistent. So, importance of a trading routine. A structured trading routine instills discipline and consistency. Guys, these are the two main words you should always want to hear and talk about when it comes to trading: discipline and consistency. So, a structured trading routine instills discipline, reduces emotional decision making, and increases overall consistency. Once we have a routine, a structure, something that we're able to follow from point 1 to point 2 to point ABC, then we're able to really see what is working in my routine and what isn't working in my routine. And once we're able to do that, we're able to adapt to different market conditions. We want to begin your day with a pre-market routine to assess market conditions, news, and potential setups. Guys, I always want to be very clear with traders that I like to teach, that I like to live trade with, that it's important to give ourselves the opportunity in the morning. Let's say I like to trade the New York session open for ES and NQ. So I'll get on the markets, I'll get on the charts at 8:30. I'll give myself a full hour before markets open so I could do my pre-market analysis. That's when I do my time frame analysis, where I start on the daily. We mark out our previous day high and low. And then we come down to some lower time frames like the 4-hour, 1 hour, 30-minute, and so on. And this helps me find zones and areas of interest that I'm going to look to trade off of. Once we start doing this every morning, guys, what that does is it helps get rid of any fear of missing out, which is FOMO. Once we can get rid of that instinct, it's really helpful because, again, we're kicking emotions out of our trading. We should not be emotional traders. And it's also important, guys, to set clear goals for each trading session and even each trading week. Give yourself a goal and a reasonable goal. I know everybody wants to get a payout. Everybody wants to make money with trading, and it's not a get-rich-quick scheme. When it comes to prop firms especially, it's important to show that we're consistent and we're able to make 500 every day, 1,000 every day, whatever the case may be. Even if you guys, again, are going for base hits, $75 per trade on a winning trade, but you're risking 25, right? As long as you have a good risk to reward, you'll be able to grow consistently and create a structure and a trading routine behind it. Establishing a routine outside of trading nurtures overall well-being. Guys, this is very important. So you might think, oh, well, whatever's going on outside of trading has nothing to do with my trading. It's absolutely wrong. If you have some type of complex or you have something going on outside of trading, whether it's a personal dilemma, whether you're dealing with something, if you're still working, you work a job outside of trading too, and you're worried about a due date for something, or even there's something going on in your family. When we have different emotions and we have different mentalities going on, and we have a lot of not voices in our head, but we have a lot going on that can't keep us sort of sitting still and following our structure, then we are not at our 100%. And as traders, just like a doctor or a surgeon, if they're sick, they're not going to go perform a surgery. If we have to treat trading, we are our own boss, we are our own responsibility, and we are our own accountability. There's nobody telling you that you have to take this trade now. There's nobody telling you you have to take that many contracts. And there's nobody telling you you have to move your stop loss. keep your stop loss wherever it is. Once you enter a trade, you should have a predetermined risk and a predetermined price level that if your analysis is wrong, you get stopped out. Not that if it starts moving to your stop loss, you advance it even lower. That's not how we want to trade. We want to know how much we're going to make on this trade and how much we could lose on this trade as soon as we enter. My trades, I personally like to risk anywhere between $150 to $250. This helps keep me in a ballpark where I have a nice 2-to-1 or higher risk to reward, where on my A+ setups, I'm maybe risking $250 to make anywhere between $750 and $1,000. What this does is it gives me the ability to take 1 or 2 A+ setups, be up anywhere between $1,000 and $2,000, depending on the risk to reward. And then if I'm up 2,000 and I'm still keeping the same risk between 150 and 250, I could then take 4 wrong trades and still be up a good amount. And that's what's great with having good risk management and proper risk management, is it gives us the ability to take those trades to be green or be red more than we're green on our win rate, but still be profitable. And as traders, that's our goal. Our goal is not to have the biggest win rate in the world. Our goal is to be profitable and consistent. Now, a daily trading routine, guys, is very important. Creating a step-by-step routine for your daily trading activities, including market analysis, trade execution, and review. It's very important to review how is previous day's price action trading. Guys, something I want to mention real quick while I have your attention. Hit that like button, but don't forget markets are closed tomorrow for Juneteenth. It is a holiday, so the New York session markets are closed, so do not show up for work tomorrow. And designate specific time slots for research, charting, and order placement to manage time efficiently, right? Guys, when we're entering a trade or we're coming into the market, we want to be prepared for our price levels before we even get there. As I'll show you guys later in the stream, I trade supply and demand. So when we come near one of my levels, a lot of times I'll use something like Bookmap or Order Flow to help me recognize where there's buying, where there's selling, and where my entry and stop loss should be. Let's see, and stick to your routine even during slow market periods to maintain discipline. Guys, we have to remember market conditions are constantly changing, just like seasonality, right? So sometimes we might be in a strong bull market, we're trending higher, buying the dip is continuously working. On the other hand, that might work for a while, and then 2 weeks of that, markets go flat. When markets are flat, we can't just go crazy. We can't just keep going long. We have to recognize when market conditions are changing and adapt to them. And the only way to adapt to changing market conditions consistently over time is by keeping the same trading routine and system in place. So you could adapt to it as we go. You could look at previous day's price action, previous price levels, but continuously progress with your same trading routine and system. Your routine and trading system go hand in hand, and that's what's going to lead us into trading strategies and confirmations. Guys, let me know in the comments, what's your favorite trading strategy? What do you trade as a trader? I want to see some comments, guys. I want to make sure that you guys aren't just strategy hopping. Do you trade an opening range breakout? Do you trade off a previous day high, previous day low? So what are trading strategies? The definition of a trading strategy is a predefined set of rules. Again, we were talking about routine and rules and structure. Once we have a strategy that we know we trade, we have rules that come with that strategy. And once we have rules around everything, that's what gives us good stability in the market. That also gives us methods for entering, managing, and exiting trades. The purpose of a trading strategy is to provide structure and consistency, and it minimizes emotional decision making. Again, guys, most of these rules, almost everything that I'm teaching you all today, is based solely off of how to get away from emotional trading, because emotional trading is not a trading strategy. Trading strategies are things we see along with price action as well as volume. So some examples of some trading strategies is supply and demand. That's trading around key zones of buying and selling pressure. Fair value gaps, as I'm sure many of you have heard. I'm sure some of you trade ICT concepts. That's FVGs. That's identifying imbalances in price action for entries. I'm going to show you guys a great example of that. This morning, the ES gave us a great 5-minute FVG along with a low volume node, which is volume analysis, which gave us a good entry. And liquidity sweeps. So liquidity sweeps are considered pivot highs and pivot lows. So if we're looking at the hourly time frame and we are coming up to a recent pivot high, that would be a buy side liquidity, because once we break that pivot up, there's a lot of retail traders trying to take that breakout there, which is buying liquidity. There's also a lot of sellers that will look to stop out once we break that high as well. So that's why it's important to be careful with any kind of breakout trades, guys, because a lot of institution is preparing for retail to try to take that breakout. And different trading strategies. Again, guys, I want to see in the comments what your top trading strategy is. And if you don't have one, tell me you don't have one. Ask me, what do you think you should get started with? In my opinion, guys, when it comes to market structure and understanding support and resistance and higher highs, higher lows, understanding just the basics of trend lines on a higher time frame, just like an hourly, is very important and very helpful. When it comes to supply and demand, I feel like this is also another great strategy to help give me structure around my system. So guys, the way I like to look at trading is we have to think of it like when we're building a house. If we build a house, we don't just need a blueprint. We don't just need walls. We don't just need a ceiling. We need everything. We need structure. We need a base. We need foundation. We need walls. We need a window. We need a ceiling. Okay, well, with trading, we need proper risk management. We need a trading strategy we could rely on day in and day out. We need a system that we could follow as well, which would be our trading routine. Moving above the 9 EMA with news catalyst. Nice, I like that. Average true range over 1. Beautiful. Okay, guys, that's great. Being able to answer the question of what strategy do you use and being able to answer that is number one into being a successful trader, right? You're not going to be a successful trader just because you could answer that. But once you can answer that and you're able to build a routine surrounding that strategy and system, then you're really going to start to further develop. There's buy side and sell side liquidity. That's pivots. There's the orb, which is the opening range breakout. This could be marked on the first 15 minute of the 9:30 candle. So the first 15 minute of the New York session, because what that does is it gives us an idea of our range. So if we mark out our 15-minute high or 15-minute low and we get a breakout to the upside, then that could help us on our bias to say, okay, I only want to look for longs as long as we can remain above, and vice versa. Order blocks are another great way for confirmation. These are areas where price has consolidated before having an impulse move away from that zone. And gap fill. Gap fill is another great strategy. And the reason I named all of these strategies, especially something like the gap fill or orb or even previous day high and previous day low, is because these are strategies that are defined for us. There's no subjectiveness. When it comes to trading and creating our system and looking for discipline and consistency, we don't want to trade a strategy that has subjectiveness. It looks like we could go higher here. That's not a trading strategy. Oh, we pushed up high enough. We have to start pulling back at some point. I want to take this short. That's not a trading strategy. Give yourself supply and demand to give yourself an idea of areas of higher probability, right? Then when you get a reversal entry in a supply zone, that's a lot stronger than a reversal entry in the middle of nowhere, as I call it. So what are confirmations? Guys, we mentioned trading strategies, but what are confirmations? Confirmations are an additional evidence or signal supporting the validness of our trading setup. So if I was looking for a short position off of a pre-market high, like let's say this example right here, this was a pre-market high. It looks like we swept it with a news candle and then we reversed back lower. Let's say we also had a supply zone right here. If we had a supply zone and we had a pre-market high, then I would wait for price to hit that supply. And as soon as we react, I would take it short with my stop loss above that new high we just made. And the reason for that is because the supply zone and the pre-market high are a dual confirmation, giving me extra probability. The third confirmation we get is the reaction. So once we start reacting to it, again, entry gets triggered once we get back here, stop loss at that high, again, assuming we're in supply, then we're able to go target that new low that was created as well. The purpose of confirmations, guys, is to increase your probability of success. So having a strategy is great, but having confirmations along with it will help increase our probability. As traders, I'm sure many of you have heard the whole trading is gambling. That is not true, guys. Trading is not gambling at all. Yes, do we know for sure if we're going to make money on a trade? Absolutely not. But with proper risk management, like I mentioned earlier, a 2-to-1, a 3-to-1 risk to reward, you're able to be wrong more than you're right and still be profitable, still be making money. Orb is a great start of the day on the screener, results in volume gainers. Absolutely. Absolutely. Volume gainers is another great way. If you're not trading futures and you trade more of stocks and options, definitely want to look for volume gainers. Some examples of confirmations would be candlestick patterns, volume spikes, divergence, and liquidity grabs, right? Which again would be pretty much breaking a sweep high. So this would be our buy side liquidity right here. Because I know once we're breaking this high, at some point this wick was a full candle. And at some point when this was a full candle, people were buying. Those people buying all the way up here, buying the breakout, buying the highs, we reverse on them. They become the liquidity. So why are confirmations important? We went over strategies. Strategies are great and all, but why are confirmations important? Well, it filters false signals. It reduces the likelihood of us entering trades based on weak setups. If we're coming into a supply zone and that's my only confirmation, well then guess what? I'm probably not going to take that trade. I want to make sure I see some follow through or something to reassure me that my first strategy has confirmation to follow through. Once we see things aren't lining up, that's the great part of our system, guys. When things don't line up, we know not to take that trade because there's a good chance it won't play in our favor. It enhances our accuracy on our trades as well, confirms the presence of buyers or sellers at a key level, and it builds confidence. It helps overcome hesitation by providing evidence for the trade, right? Got to think of it, if an investigator is trying to solve a crime, they don't just assume whoever's most likely. The wife was killed, it was the husband. No, they need to find some type of confirmation. They need to find some type of evidence. Well, let's find evidence in the market that this supply zone has sellers, that this demand zone has buyers, whatever the case may be. We look for that evidence at our key levels, increasing our probability. I always like to refer to it as taking a trade with an 80% probability versus trying to take a 50-50 trade where it could go up, but it could also go down. No, I want to take a trade that I have confidence that we're at the bottom of our range, we swept a low, we're holding demand. We're at the bottom of a range, we hit demand and volume spikes higher and we started to reverse. Whatever the case may be, things have to line up to help give us some strength. The retest of support is great. Yep, absolutely. Different confirmations. So here's some different confirmations for you guys. And if you do want, guys, don't forget journaling your trades is super important. If you come over to my website's tradingpioneers.net, just check Trading Pioneers and you head over to resources. I have a free trading journal for you guys to download right over here, trading journal. It's important to journal your trades as well, because again, this is something that the 90% of failing traders aren't doing. I'll show you guys right now what that journal looks like and how you should be breaking down your trade so you could see what's successful and what isn't. So we have a little cheat sheet, got some resources, Bookmap, Apex Trader Funding. These are the top 2 resources I like to use, and of course TradingView for execution. So trade information, guys, we want to know our date and time, trade symbol, entry price, exit price, how long were we in this trade, what direction was this trade. This is all very basic information. Then we get into our risk management. How was your risk management? Where was your stop loss? Did you adjust your stop loss or take profit? And again, this is a question that you'll start to see over time when you journal your trades that, hey, you know what? It seems like on my best winners, I don't adjust my risk, my stop loss. And it seems like my biggest losers, it's because I am adjusting my stop loss. This is something that you'll be able to find structure and overcome simply by journaling your trades. Trade analysis and outcome, reason for entering the trade strategy or setup used. Again, this will help see, okay, it seems like I use supply and demand and those trades hit 80% of the time versus a trade setup I used on, let's say, the gap fill that only hits 60% of the time. This helps you define your system, define your strategy, and rate your setups, right? Once you start seeing, okay, wow, it looks like 90% of the time I use supply and demand along with a liquidity level, it hits. It works out really well, especially when I wait for that 5 minute to close in my favor. Okay, boom, that's great. Now I have an A+ setup in my books right from the journal that I've been doing. So again, journaling, it helps us further develop anything we might need. And then trade review and lessons learned. This is probably the most important part of the journal. So guys, if you're taking 3, 4, 5 trades a day and you feel like I can't journal all of those trades, that's okay too. Just make sure you're at least journaling the day, right? So journal review of the trades or your trades in general. success or failures. How did you trade that day? What was your strategy used that day? Every day in and day out, we should be using the same strategy. Now, setups might be different depending on market conditions. So very important that you guys journal your trades. And let's see. So some different confirmations that you guys could use, guys, would be higher time frame trend, right? When in doubt, zoom out is a quote that you should be ringing in your head when you don't know the direction of a trade. Well, when in doubt, zoom out. If the 5 minutes looking choppy, you zoom out and the hourly looks like we're trending. Well, then the hourly and higher, that's what gives you your trend. If it looks like this morning, we had gold, looks like it was trying to push lower. Meanwhile, the hourly and higher suggested that we are barcoding. When I say barcoding, I mean we're like practically just red, green, red, green, red, green. I'll show you right now on the hourly. Look at this price action, guys, on gold right here. This is horrendous price action. So on the 5 minute this morning, it was looking like, oh, we're going to sell off. And we pulled back. But when people were trying to take these shorts down here, because guess what? We had a break of a liquidity level. And we see that this red candle broke it, hit 33.91, but it was in a demand zone. So that would have given me confirmation and say, hey, guess what? If we could reject back higher, and look at this too, our volume spiked as well. Volume spikes in a demand zone off a liquidity level. This is an A+ setup. We have confirmation, we have clues, things are lining up in our favor. And this is even without using a book map like I usually use on my left-hand side. So previous day high and previous day low, are we above it? Have we been seeing previous day high and lows frequently used? Something I like to look for, guys, especially when trading things like gold or crude, is have we been breaking previous day highs and closing green? Have we been breaking previous day lows and closing red? And you could use this on any stock you're looking for, because what it does is it helps give you confirmation of direction on the higher time frame, being the daily. And the daily is the highest we really want to go when we're day traders, because we're looking to trade that intraday direction. So once we find that daily direction and we find some lower time frame levels to enter on, that's what helps give us more structure breaking down. Guys, make sure you're hitting that like and subscribe button. I do appreciate it. It's all free. It's free to hit that like button. It's free to drop a comment. And I do appreciate you all. And I hope you guys learned something from today. Order flow is another fantastic form of confirmation. That's where we would find volume analysis. Imbalances forming off of key levels like a fair value gap. That's also great. VIX inverse is the ES and NQ. So guys, if you're using the VIX when you trade, if you're looking for buyers on the ES or you're looking for trends to continue higher, then you also want to look for the VIX to continue lower. And equities for NQ. So guys, I'll show you also what I like to use on the NASDAQ. So this is my main chart for ES and NQ. We have our supply zones. We see we rejected supply very nicely today on ES and NQ. So again, that could also be a form of confirmation. ES and NQ, which is the NASDAQ and the S&P 500, we're both hitting a supply zone up here. What happened? They both pulled back. Something else we could look for is, like I mentioned, equities. So a lot of times I'll keep this chart of 6 equities on a separate monitor. So I have 6 monitors. I'm sorry, 4 monitors when I trade. Imagine 6, my head would spin. I have 4 monitors. We have our futures, which is right in this main screen. Usually I keep my equities on the screen above. And what I do with my equities is I like to look for direction, and I like to make sure that they're all generally in the same direction. So if I'm looking, and every morning I like to start out looking at equities to see, is anything above its previous day high, previous day low, or are they all range bound? Something we noted here on Meta, it's within its range. Tesla is within its range. Nvidia was within its range. Amazon also within its range. And it seems like Apple was also within its range. So when I see that there's a lot of range-bound price action on these large cap equities, now these 6 that I mentioned are 6 of the top 10 holdings on the ES and the NQ. So they have a big pull when it comes to directional bias on them. So that's why it's important to watch, especially on the NASDAQ, because the NASDAQ, the S&P 500, guys, that's 500 of the top companies on the New York Stock Exchange. NASDAQ, on the other hand, is the top 100, with it mainly leading in tech. So because it's mainly leading in tech, these 6 all being tech stocks, they all have a much stronger pull on the NASDAQ than they would the ES. So if I see that Apple and Microsoft and Meta, Nvidia, they're trending higher, breaking previous day high, making new high a day. I'm looking for that follow through on the NASDAQ because that helps give me confirmation we're going higher. Now, another cool trick that I like to use, guys, if I don't have access to an extra monitor, is I like to use the weighted index down here. What the weighted index is it's a weighted variant of all of these different equities that I just mentioned. So it's Microsoft, Apple, Nvidia, Amazon, Meta, and it does have AVGO in it. I switched out Tesla for AVGO because I've noticed that Tesla a lot of times, and I'm sure many of you have noticed as well, Tesla will almost inverse sometimes the direction of the market in general, and it doesn't tend to have the strongest of pulls of direction on ES and NQ. It doesn't really necessarily need them, therefore we don't need it. So AVGO was recently added this past year to NASDAQ as a very highly weighted. So what I do is I would Google, and this is how I find my weightings on them. I would Google top 10 equities on the NASDAQ, and it would tell me that there's 8.5% of Microsoft, 8.18% of Apple, 7.5% of Nvidia. I basically just put those percentages into share counts. So what we see here is we have 8.8 shares of 8.5 shares of Microsoft, 8.18 shares of Apple, and so on, so that it measures them accordingly, right? It measures Microsoft's strength a lot stronger than it would measure Meta's strength. So this is exactly what I like to use. And then we have the VIX down here as well, which VIX, I also have my key levels marked out. So as we see down here on the VIX, we came to the previous session low. We also came near a key level. And when we were doing that, we were also coming near an area of resistance on the ES, the S&P 500, and the NASDAQ. So this would have been a major confirmation. We mentioned confirmations earlier that, hey, guess what? We have confirmation number 1 here. ES is in supply. That would be our strategy. 2, we have NASDAQ also in supply. And now 3 would be VIX at support. Because remember, guys, VIX is going to be inversing the ES and NQ. Therefore, what we look for is if ES and NQ are at resistance, we want to make sure that VIX is at support. VIX came right off of that previous session low, started moving higher. That would have helped give us some confirmation to take some short entries off of the supply zone and possibly look to target VWAP, right? And we would still be in this trade had we taken it. Let's see. And same with here is our weighted index. Our weighted index got above its previous session high, and when it did, volume started to decrease. Guys, volume is so important when it comes to trading because it really helps to also confirm our trades. So check this out, guys. Our weighted index, we rallied off of our previous session low all the way back to our previous session high like it's no problem. We had good volume on that rally. Once we broke above, that volume suddenly and sharply decreased. Once that volume decreased, we saw price start to get stagnant. We had resistance on ES and NQ. Again, this is now 4, 5 different confirmations, different reasonings, different clues as to us going to pull back or giving us our short entry. Now let's see. Now I wanted to also cover on gold because gold gave us some craziness today. I wanted to show you guys on crude oil. Crude oil, we'll go with crude first. And the reason for that is because it started to give us a really great setup. And I'll show you guys the setup we saw on Bookmap there as well. And what we saw on crude oil, let's see if we could find it now. Now this morning, guys, I'm going to show you the replay mode. Everything was fine. There were no issues. We were just casually going higher, making higher highs, making higher lows. Oil was very bullish. But what happened at 10 o'clock was somebody tweeted, and I think you guys know who. And whenever something like that happens, let's see if I could pull up. Let's see. He tweeted. He was tweeting, obviously, unfortunately, about the whole Iran situation. It's also tweeting about the India situation as well. There's really a lot economically and globally going on for us to be aware of. Let's see. Let's scroll down to 9 o'clock or 10 o'clock, I should say. So here's where Trump was really going at it, right? Nothing. He's saying Iran has reached out. Nothing is too late. They're totally defenseless. They have no air defense whatsoever. Trump's tweeting. He's saying all of this around 10 o'clock. And what happens to crude oil, guys? Well, here's our 10 o'clock candle is not our next candle. It's going to be the one following. Markets went crazy. Markets gave us a crazy reaction on oil. This was a wild sell-off. Guys, we were slowly moving higher. He started tweeting, things were said, and markets gave us an insane reaction. I mean, it's still pushing lower. We could see where we're currently trading. Since then, we had our economic news, which would be a tweet. We had our sell-off reaction to that. We had continuation. We pushed lower. Since then, we sort of started to base out. So right now, there would be no trade setups on oil. At this point, what I would do is I would look at the daily time frame, and I would sort of start to get an idea of where's our trend and where's our range. Because range trading is very important, especially because markets range about 80% of the time. So something I would do is I would mark out, okay, I see we have our upper wick up here. We have another wick over here. Clearly, there are sellers in this area because on this day, this is Monday, we had a very strong sell-off. So I have a major key level at 74.38. I can mark with my rectangle tool from the high to the low that, hey, you know what? We have some potential sellers in this area. And once I find my range, guys, what I'm then able to do is I'm able to say, okay, now do I have any supply zones in that area? And again, here comes the forms of confirmation where I say, okay, this is the top of the range. We have a supply zone. I'm taking this short. This is the top of the range. I don't have a supply zone. I'm going to look for a breakout and a retest of this zone. But whatever the case may be, everything has to have a form of confirmation. So right now I'm looking up here for any new supply zones. I'm on the 15-minute. I'm going to the 30-minute, 45-minute. I see a small 45-minute supply right there. But let's see if we do have an hourly. I'd much rather an hourly. But I'm not looking like we're seeing anything right here. So because we don't see anything of high quality, I'm not going to mark anything out at that point. Let's see what we can do. So because we have our range high, I'm going to delete this range high for now because we also have this green zone, which is working as our range high too. We can look to mark out this for our 45-minute supply, mark that out as our supply, delete this, and that's it, right? So some key levels to also keep an eye on, guys, is our opening price. I've found that price reacts very well to our opening price level. We had on crude oil today was at 74 even. That's where we ended up rejecting. I think gold also had, look at our open price level right here on gold. And this worked very well as a resistance. We were above it, it worked as support. We're below, it worked as resistance. And now it looks like we're coming into it again on gold. So let's take a look at Bookmap, see if we do have anything of interest up here. Now we see how we react once we fill these big, strong asks. That's passive sellers. They were met with aggressive buyers. And we don't really have much price levels to the downside other than 33.85. Now, something I want to mention on gold this morning, guys, and the main reason I did not trade gold this morning, and we'll come to our replay bar, replay system, we'll bring it to about 8:30 because that's when I do my pre-market analysis, is I like to use the volume profile, especially when we're within a range. So once I saw that on the hourly and on the 15, we were extremely range bound for about 2 days now, I posted my volume profile at the start of our range. Wouldn't be the top of this move right here, it would be the start of our range. And I saw that we have what's considered the D shape, and I'll draw that out for you guys so you could see. That's going to be a D shape. So a D shape sort of like this, but because our volume profile is on the left side, it would look something like this, right? And that's where we have volume consolidated in the whole portion versus where we sometimes will have price consolidate but have low volume nodes to the downside or upside. So when we have a D shape like this, guys, what I like to look for is I like to look to buy the lows or sell the highs because that's what price is doing. We're rejecting highs, we're rejecting lows. We're range-bound price action right now. That's exactly what gold ended up giving us. So we were watching 34.18 area for possible shorts, and things ended up working pretty well. I did not take any trades myself on gold. Look at that. See that rejection of the highs? It came back lower to the low volume shelf to the lows. It rejected the lows. Very range bound, but range bound can be predictable when it comes to the market. And that's what we look for. It's what we want. We want predictability, probability, and consistency. And where does that all stem from? That stems from our own personal structure and trading strategy and system. So that was gold for today. That was also oil, which gave us just a wild move. I mean, guys, oil, if we're looking at oil here on the daily time frame, from the start of the whole war talk, we were able to break above a major area of resistance, the 63, 64 area. And once we broke that, I was telling my community, guys, listen, I'm finally happy oil's getting above 64. It's been trading below 63 for the longest time. And since it's been trading below 63, price action on it has been extremely poor. And I personally wasn't finding any high probability setups. Since we broke out, been trading oil very nicely. Things have been lining up much nicer, and we've been getting a nice trend. And that's what we want to look for when it comes to trading futures, guys. We get the pleasure, we get the ability to trade different markets. We don't just have to trade ES, we don't just have to trade NQ. We could look at gold, we could look at platinum, we could look at crude, we could look at silver, and looking at different markets gives us the ability to take advantage of different market conditions, which leads to different market trends, which gives us the ability to look for different markets to give us better probability trades. I wanted to point out here on platinum this morning, this was a setup that I called on our community, was that platinum. And what we'll do, you know what I'm going to do? I'm going to open a new tab. We'll create new layout. I'm going to open this all the way. And what we'll do is we'll put two charts up. On the left side, we'll have gold. On the right side, we'll have platinum. Here's Palantir. Here's another little quick setup for you guys. I was looking for Palantir to break above 134, 136, retest it, which it did right here, and then continue towards that 150 level. I can see if I can pull that up real quick for us. Let's see. So check it out, guys. Join our community at bullishbears.com. A live trade every day for us. But I posted this on the 10th. Said Palantir has been in a strong bull trend for over a year now, starting around $20, currently trading around 130. So this is before we had our breakout. Look at this, guys. This is when we were trading over here on this day, the 10th. This is when I posted that post. Said I'm looking to see if we could break out, retest this area of resistance so it becomes support, and look to go long in that area of support. And that's exactly what we got. We could maybe retest it one more time, but it's looking good, like it wants to make its way towards 150. But now let's bring back what we were originally looking for, and that's going to be platinum on the left. And what we can do is we could add two charts, and we'll put gold on the right, GC. And now what we can do is we could link these charts up as well. So now what we could do is we'll keep symbol off, keep interval on, time on, date range on. So now when I change it to the 15-minute, it changes both of them to the 15-minute. So now what I wanted to point out, and we'll delete our volume profile for now on gold, is that look at our current trend. If we pull up our replay system and we look back to even right here's 830, we see that platinum, this is our chart of platinum on the left-hand side, has been making higher highs and higher lows. It's a much stronger, much clearer trend on platinum than it is gold. Gold was very range-bound, giving us very poor price action. So what I was looking for on platinum was, look at this. It was continuing higher. It was breaking higher. It was looking real good. We had a level on Bookmap, and I'll pull up platinum. We could even look at platinum on Bookmap, guys, and it responds very well. This is what I was looking for on Bookmap. So we had a very strong passive ask. Now, what that means is it's a passive seller. That seller was met with a very aggressive buyer. It was met with some absorption as well, but we were able to break it. So once we break a key level of resistance like that, I automatically like to look to see if we could retrace and hold it as support. Something else to add to this trade was we created a low volume shelf right below it too. And those low volume nodes on the volume profile usually work as magnets because markets like to get back into them so they could fill any volume that wasn't able to be traded at that point. So we also had point of control, which lined up there too. We retested this area around 1300 and had a huge push higher. My original target, you see this 1312 up here, I had 1311.8 because I didn't want to go for 1312 in case we rejected it. But that was our next level on Bookmap up here. We had a very strong passive ask, and that's 144 lot seller on platinum. That was my target. We see that platinum gave us a beautiful move. By the time we got up to that 1312, this trader, whoever this was, institution, retail, whatever the case is, they pulled their orders by 9:30. So New York session open, they pulled those orders, and platinum ended up continuing, and it hit that level, that 1312 perfectly, and then it rejected back. Let's see where we are. It double topped up there before finally giving us a pullback, which it did trade against it right now. Right now, look at that. It's at 13.12 again. So something I look for is, hey, you know what? 13.16. That's our new level of resistance right now. If we're able to scale above that, get to 13.20, then guess what? I'll look for the same type of setup where we have that low volume shelf met with an old area of resistance, now becomes support. This one's a little higher, around 13.16. Then I'd look to target the next level that we have on Bookmap. Now, right now, because we're already pretty extended and markets are sort of ranging, especially on our metals, I would not look to take that follow through trade. This trade setup was perfect as is. It's always important, guys, to be able to recognize A+ setups versus not A+ setups. Once we find setups and we start forcing trades, that's really going to have a huge damper on our mentality. And when that happens, we start questioning things that we probably shouldn't. And that's why strategy, concepts, structure are so important, because it keeps you from guessing anything. Let's see. So Meta, these are our equities. We could pull up our equities one more time. Let's take a quick look actually at ES on the daily time frame. Do some analysis of what's going on right now. We'll delete this one. And in fact, what we'll do is we'll pull up ES. And I want to pull up the June contracts, because this is where I have written up for our higher time frame, right? So we have our previous all-time high sitting around 62.35. What gave us this huge sell-off? Well, was our tariff worry. Trump started announcing and speaking about tariffs on Canada, on oil from Canada, on Mexico. There was a lot of concern saying, okay, are we going to a trade war with all these countries? Is China next? There was so much uncertainty in the economy that stocks performed very poorly. We had a huge sell-off from all-time highs. We went as low as, I believe it was 22% of the downside. Guys, a bear market or correction is considered after we hit 10% off of those all-time highs. We hit 22%. Now, since Trump announced the Liberation Day, right? He had a Liberation Day, I believe, was on the 7th or 8th. And then I think a day or two later on the 9th is when he announced that there's a big pause on all tariffs except China. And that was our first tariff deal. And that's what we need. The economy needs an economic deal or situation, status, whatever it is, update, to have a reversal of direction. Markets can't just reverse or hold direction for no reason. This sell-off wasn't there for no reason. It was because of the tariff worry. This reversal right here isn't for no reason. It's not because Trump said to buy now, even though he did say to buy now when that happened. But it's because of the tariff deal. Everything moves for a reason, and that's why it's so important to keep an eye on economic factors. It's important to keep an eye on your economic earnings, news reports. Today, guys, we have FOMC at 2 o'clock, guys. Make sure you're ready for that. 2 o'clock, we have Fed interest rate decision, and then 2:30, we do have our Fed press conference. So expect volatility, and that Fed decision, that might be what we need to get out of this current range that we're trading in. We see that on ES, we're ranging in this block right here. We'll do box. Oh, we won't do box. Let's see. You know what? We'll get rid of the rectangle tool and we'll go to our channel. So we see that ES is very range bound for weeks now. It's been slowly going higher, right? We were range bound here, we broke higher, and now we're just still range bound. So I would almost consider this as our range. We've been range bound for a long time now, since early May. Now it's middle of June. So, can this Fed interest rate, will it change something? Will he announce a Fed rate cut, even though we're not anticipating it, not expecting it, and the market will react very strong? Will he announce things stay the same and we end up pushing back lower again? Or does it give us a lot of volatility that leads to a whole lot of nothing, because maybe there's something else in the works, right? And when I say something else in the works, I'm not necessarily talking about just Fed interest rate. I'm talking about in general of what's going on globally. Maybe the Iran and Israel, maybe something happens with them. There's an even stronger attack. Maybe there's no more attacks. We don't know. As retail traders, as individuals, as people not associated or affiliated with the government, we don't know what's going on. We're not sure until we hear the news and we know that something's going on. So because of that, as day traders, as investors, our goal is to react, not predict, right? We react. We wait for the reaction. If we're doing our analysis here on the daily time frame, you should be a swing trader. If you're doing analysis on the hourly, then find your entries on no lower than a 5-minute, maybe 15-minute candle. but it's very important that you do your time frame analysis correctly as well. So guys, look at this range we have here. Now this is a nice chart because we don't have zones all over the place. We don't have moving averages all over. We don't have fib tools everywhere. We have very basic support and resistance and our range, right? And again, if we're trading a range, this would be great if we were swing trading, right? Because right now I'm looking at a range on an hourly time frame, and I see that each of these slots, you guys see how it goes blue, and then it's darker, goes blue, and then it's darker. Those little areas where it's darker is the New York session. So every time we get darker, blue, darker, that's 2 days past. So I see that when we go from the bottom of our range to the top of the range, it takes a few trading days. I see from the top of the range to the bottom of the range, well, we haven't gotten our way back to the bottom yet. We've still been making higher highs and higher lows. So as much as we have been range bound this past week or so, we have still technically been holding this bull trend. Now, I will mention at this point, check this out. We took out this low just barely right here, and we failed to take out this high. So with that being said, we could be creating a lower high and possibly a lower low. Now, again, this is really going to depend on how FOMC comes in today at 2. It's going to depend on how or what Powell says. It's going to depend on how markets react to it. But when that happens, we don't move markets, guys. We just react. So we'll see how the markets react at that point. Let's go back to our regular ES chart so I could show you guys some areas of support and resistance that I'm going to be looking at. So the first thing I do want to mention is check out these extremes down here. Every time we do make our way to these extremes around 59.95, we find support and make our way back towards that 6,100 level. So if we were able to get some type of FOMC sell-off, I'd look to see if we can maybe find support around 60.13, which is now my new 90-minute demand zone, or if we break through that with strength too around that 6,000 or 59.95 area. That's a key psychological level because it's an even 6,000. When we have even numbers in trading, guys, those are key psychological levels that could have a big impact. And the reason they're key psychological levels is because any trader, no matter their strategy, is looking at those levels too. If I wasn't trading supply and demand, I would still be looking for those key psych levels, 6,000, 6,025, 6,050, 6,075. Key psych levels are seen by institutions, by retail traders, everywhere, all the time. So it's very important that we mark them out and that we're aware of them. So let's take one more stab at oil too. Again, looking at oil on the daily, we've really been rallying, but once we start to zoom out here on the daily, we see that, hey, guess what? We're rallying, yes, but at this point, this is an area where we found resistance. So on a higher time frame, this is a daily where we're consolidating. So that means it's also shown on the weekly because I see how many candles it takes. Look at that on our weekly time frame. Actually, it looks like I have a weekly supply zone right here. So I'm going to mark this out as our weekly. Do text, weekly, great. And we will make that a little lighter. Awesome, that's good. And then we're going to adjust the supply zone. And I see that, hey, guess what? We rejected it once, twice, 3 times, now 4 times. Now, the more we test a zone, the more liquidity we're drawing from it, so it loses some of its strength. So if we remain trading against this zone up here, there's a good chance that we want to squeeze through it and pop through that 79.11. Now, another trick, guys, that I want you to do as a trader next time you're trading is don't just look at the candles. I want you to look at the price levels too. Looking at the price levels and looking at how prices reacted to them in the past is such a key to success and long-term success in trading, because a lot of people get stuck just looking at candles going, oh, this is a basing, we're going to reject, I'm going to take a short, oh, I got stopped out. Oh, we're selling off, we're engulfing, I'm going to take the short way down here. Oh, but where's my stop loss? We want to be able to trade with the range, sell the highs, buy the lows, trade accordingly, trade with probabilities, and trade with the right odds. Guys, make sure you're hitting that like button. We're dropping some gems over here today. Hit that like, hit that subscribe. Go check out tradingpioneers.net for a free trading journal. I also do one-on-one mentorships there too. But also don't forget to fill out that form in the comments for a chance to win a free Apex Trader evaluation account, guys. Let's cover real quick. Let's see if we bring our Apex up. That's not Apex. So Apex Trader funding. No, I was going to say I'll try to pull up those slides because I remember earlier somebody mentioned about the 30% rule and how it can be a little scary sometimes, but that 30% rule is very important. And the reason for that is because it keeps us consistent. So I'm going to pull a tab over here for a quick second, see if I could find that 30% slide for you guys, because I really do want to give you the best information available out there. That's my goal as a trader. I've been trading, guys, for 6 years now. I've been successful with futures for the past 3, almost 4 now. My goal, I love giving back. So if I could give back, that's why I love Benzinga as a community is fantastic. It's all about giving back, showing and showing you guys the best opportunities and the best skill sets that you would need to be successful in trading. I don't think I could find that. Okay, you know what? Here we go. So let's cover that 30% rule real quick, because again, there's always questions on it. People are always concerned about it, but I promise you, if you're a consistent trader, don't even think about the 30% rule. There's no reason to think about it. 30% rule, guys, what is it? Limit on losses. Open trades should not exceed 30% negative drawdown from account's profit balance. An example of this, if you have a $5,000 account and you're up $4,000, your drawdown shouldn't hit $1,200. Guys, if you have an account size, a personal funded account that's only at $4,000 and you're looking to grow it, you should not be risking over $1,000 per trade anyways. That is a quarter of the account. That's absurd. That's insanity. We don't want to be doing that. Now, new/low profit accounts, same situation, guys. If we start a new Apex account that's a 50K account and it's got a drawdown of 2,500, we're not trading with 50K. We're trading a $2,500 account looking to profit 3,000, which is a 1-to-1, and looking to sort of double the account if we're looking to profit 3,000. But with a trail stop of 2,500, when trading an actual funded account of only 2,500, you should not be risking $750. I will yell at you if you do this, guys, because that's not proper risk management, and that goes against all of your rules and your system and your strategy. Now, here's the best part, though, about the 30% rule that grows with you. So adjustment is based on growth. If you double your safety net, your 30% rule goes to 50%, which is insane. 30% rule, don't take advantage. Let's see, where is it? So here's some examples of the 30% rule and how you could sort of tell if you're in the 30% rule or not, and how you could find and make sure that you are hitting that quota. So I know if you're trading a 150K account and your best profit day was 2,000, here's how you would calculate it. Now, this is the same for a 50K account, guys. If you make $2,000 in a single day, your P&L has to be 30%, right? That has to be below 30%. So what you would do is you would take your biggest day, divide it by 0.3%, or 0.3, not 0.3%. 0.3 will give you the percentage, and then it will multiply it and give you what your total P&L once you request a payout should be. Guys, 30% rule does not enact as soon as that day's over, right? It does, of course, but it matters once you take out and go to take profits. So if I make $2,000, if I'm on a 50K account and I make $2,000 on my first trading day and still have 7 trading days to trade, well, let's see, I made 2,000. Now my profit target's 6,600, so we'll do 4,667. I have to make $4,600 across 7 trading days. Divide that by 7. Well, now I made $2,000, and now the rest of my goal is only going to be 670. So I can make 2,000 one day and then go make 700 pretty consistently too, right? And that will still keep my $2,000 day under the 30% P&L. And again, that increases to 50% once you start really growing the account. So 30% rule is really no worry, guys. I would never be worried about a rule like that, especially because it's just their way of making sure you're consistent and not gambling, not just going full port on a trade. This means your account should show a total profit of at least 6,667 to remain within the rules. If your total profit is below that, you'll need to continue trading until you reach the target. Another big thing, guys, some people think, oh, I broke the 30% rule, I have to start over. Nope. If you let's say you break the 30% rule, you do 10 grand in a single day because you did trade a little more aggressively, but you followed your plan, you followed your system. Sure, maybe it'll take a little longer than the 8 trading days because now you have to make that 10 grand 30%. But you're able to keep growing. You don't have to cancel the account. You don't lose that 10 grand you just made. You just keep on going, keep chugging along, keep trading, stay consistent. Guys, I hope this Futures Fever helped you guys. We had some great education in here today. Hit that like, hit that subscribe. Appreciate you all for being here today. Follow me on Instagram. It's Trading with Kev. I make sure to post some of the best economic outlooks, market recaps, and everything. So guys, I'll see you there. Happy trading, and I'll see you guys next week.